Hello traders, and welcome back to another video here on the Learn to Trade channel. Before we go any further, if you like what you see, subscribe to the channel and give us a thumbs up. That will help me out uh, reaching other traders. So we're going to talk about the US dollar, right? The DXY, the US dollar currency index, which is a basket of US dollar currency pairs, or the biggest US dollar currency pairs, right? So this gives you a gauge on how strong or weak the US dollar really is. So what we're going to do right now is we're going to look at the short term very, very fast. Let me just put on the correct template, the 2021 template. And right now, well, yesterday we retested that 1970 level as we were talking about, or have been talking about for a week, and we moved down. Now, right now we did make a higher low on the very immediate, on the very short term, right? But this really doesn't mean too much because we still, I'm sorry about that. We still are very much bullish. Bearish on the U.S. dollar, right? But today we're going to focus on the bigger picture, where the US dollar is going from current levels, right? So we're going to make a big jump to the weekly chart. Right here we have the weekly chart, and yeah, we're going to start with that. Cool. So we're going to focus on this 10-year bullish structure that we are currently trading on, right? And the reason we're going to focus on that 10-year bullish structure is because we are currently retesting it right here. As you can see, these or the previous 1 week candle, this one right here, rejected this structure. So basically, let me just thicken this out for you guys, because this is quite interesting what's going on, right? Basically what's going on, we have printed what seems to be a reversal pattern right at the bottom of that structure. But that's not how we do things here. What we do is completely analyze the market, right? Now let's talk about the previous low, right? Because we are in a bullish structure, this is the first low, second low, third low, and we don't know if this is in fact a low because we haven't made a higher high. That and the reason that this is what justifies a corrective move and a low printed is because price can still drop from this point on. Now, if price breaks with this low and retests the previous low, we're talking about a 2.3% move to the downside. Now, this would mean that the structure, or the 10-year structure, would be broken with. But again, price can still consolidate within that megaphone with that previous low as a support, right? But if price breaks with this low, if price breaks with the structure and price breaks with the low, we have a direct move to this massive zone, and this is a big move. I think this should be around a 6% move. Yeah, that's a 7% move to the downside from current prices, which is a massive depreciation of the US dollar. And that would mean that actually this 10-year move or 10-year structure is nothing but a bear flag. And if the amount of US dollars in the economy, or the M1 money supply, keeps rising as we have seen, the money supply has, or the M1 stock in the United States has risen 70% year to date. And if it continues to do so, the US dollar is going to just get kicked down and down, and we could see a retest of the ultimate lows of the 10-year structure, right? But that's the bearish analysis. Now, this also looks a little bit like a continuation pattern. Let me show you what I see here. Now, let me just change this to a red because we're talking now about reversal structures, right? Or continuation structures, I'm sorry. So you can see that let me just go ahead and draw this, right? So after this move to the upside, right? This big move to the upside, the one that started on April 2014, right? We made this high, and now it seems that we are trading inside of a continuation pattern or a wedge, right? A falling wedge is a bullish continuation pattern. And not only that, but if we take it, and it looks like a three-wave corrective move, right? The first wave, second wave, third wave, right to these levels. And if we grab our FIB tools and just calculate the targets of the first wave, we are right there, and the targets of the second wave, we are absolutely right there. So there's two shorter term bullish targets that have met right at the retest of these structures. So if price manages to break with these highs, in my opinion, we could see, if price managed to break with the 91 to 91.10, let's call it the 91.10 to be completely and utterly sure of a breakout. If price breaks the 91.10, this would mean that the full-on reversal structure or reversal candle pattern would be complete. The falling wedge would be broken with, and we could see some strength in the US dollar to retest at least the previous key level around the 95.15 to 95.20. So these are the two possibilities that I see on the US dollar. Technically speaking, right? Technically speaking, the more plausible scenario is the bullish scenario, which would mean that we would have a little bit of strength if this plays out. But remember that we remain bearish. Fundamentally until we see that the liquidity injection starts to ease, and the Federal Reserve's balance sheet starts to decrease. Also, you can see that we are trading in what seems to be a let's grab the crosshair tool, so this is August 2020, about a 6-month bullish divergence, right? So be patient, and I'll see you on the other video.